Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset. In this episode I just want to discuss what happens when the interest rate or the RBA dropped the cash rate very recently and what are the implications, what to expect and how it may affect you in all sorts of things in life that may occur. And the first thing that obviously comes to mind is obviously the interest that you have on a mortgage, or if you're considering buying a property and financing that, the lower cash rate would obviously reflect in most banks to lower their interest rate and lower the repayments, so making housing more affordable. But obviously there is a double-edged sword there, and if housing is more affordable, we're anticipating house prices to go up. So basically, in a nutshell, when interest rates fall, it increases our borrowing power. So basically, your servicing in order to get a loan increases. But the higher demand, with more people being able to afford a mortgage, that demand for the property often increases, which can lead to a rise in property values. So it's a bittersweet, yeah. Refinancing opportunities is probably where it helps current owners of property or investors as well. So existing homeowners, they will take advantage of the lower rates by refinancing their home loan. If their bank at the moment is already a little bit high, or they're not actually reducing their rates simply because the cash rate with the RBA dropped and they're not actually reflecting that drop, best to speak to someone in relation to that. Ring your bank and ask them to reconsider and revise the repayments on your home loan, right? So monthly repayments drop, or fortnightly or weekly, whichever you choose to pay your repayments, they drop, basically freeing up cash for other purposes such as renovating, debt consolidation, or even saving for another investment. But any savings you get, guys, I always say recommend it to put it back into your home loan. That way, if you look, it's the money that you save that you never really anticipated on. Those of you that really need it obviously will use it, but if you don't really need it and you think, well, it's just an added bonus, so if you're saving an additional $50 a week, which is not uncommon, leave it in the home loan until you really do need it. Now, the other thing what I wanted to talk about was when interest rates rise, it's quite the opposite. So whilst they are dropping, please take advantage of the opportunity of cheaper money. Now, the other side of this with cheaper interest rates, what I wanted to talk about was about employment, so opportunity for employment. And what I mean by that is it sort of opens up, the property market has a powerful ripple effect on a wider economy or job market. So if we're saying that interest rate drops, it's cheaper to get a home loan, or it increases a lot more activity within the property market with cheaper interest rates, that sort of makes the market stronger in the property market, meaning that construction and development, so there'll be an increased demand for housing, sort of that leads to more boom in the construction of new home or renovating the existing ones. And it sort of creates jobs for builders, tradesmen, architects, engineers, people that are in the already industry or related to, or stakeholders within the industry. Real estate and finance industries, it's a busy property market, always drives demand for professionals in the real estate and finance industries. I've noticed even with the announcement of the RBA that I'm busier Obviously consolidating a lot of debt and trying to refine it. So people are taking advantage of this rate drop, and the people that have got their finger on the pulse on their home loans doing their due diligence, which is the right thing to do in order to save money. So it's better saving the money in your pocket, not the bank's. They're proactive. So I've seen an increase in that. Mortgage brokers, conveyancers, property managers, so those of you who are in the leasing industry, so you'll see that investors are now jumping back into the market or will be saving to do that. So it creates a lot of activity within the employment sector. So other related industries such as home, like goods for home, furniture, landscaping, removalists, all that, it builds an activity, right? So employment, it could even mean jobs in retail, manufacturing and transport. It all makes a big difference. And ultimately, you can see why it's very important for the Reserve Bank of Australia to really make sure that dropping the interest rate will cause more inflation. But inflation isn't such a bad thing when it cultivates and increases a lot of more economic activity, such as employment and creating jobs. So the other thing what I wanted to really talk about was those of you that are actually considering a change in career or job or something, or taking advantage of what could potentially, if you're in an industry at the moment that you're sort of feeling as though you're not really making too many advances and you're thinking of making a career move, obviously what I would be doing in taking advantage is obviously getting the qualifications as well, not to stop a job, and to get qualifications whilst you are gainfully employed. If those of you who can afford not to be employed and increase your qualification, God bless. But if you to start in a new business or contracting business, or maybe becoming a real estate agent, conveyancer or finance broker or something like that, always make sure you do your due diligence, continue working with that goal in mind. You want to take advantage. You think that interest rates are going to continue dropping or slightly dropping. That's always going to cultivate a lot more work for the future for you. So it is a good time to start considering different careers or related careers that you're already sort of familiar with, I'd always say. And that could even be in the retail, consumer goods, all that sort of stuff. It does cultivate a lot of employment opportunities, careers get rebirthed into these sort of changes when they do occur, and a lot more spending starts to happen, a lot more activity out there in the market, meaning that creates jobs, right? So upskill and invest in yourself is what I always say. Make sure that you investigate what it is that you prefer about a career, or what you could improve upon yourself and grow upon that. Take advantage of this increase in activity within the economy. And that could mean, like I said, get a new qualification or start a side business. That's another thing. Or ultimately, if you feel as though you're sort of stagnant within your career, you could also say be proactive in your current role. So if your job is within an industry that is thriving due to low interest rates or lower interest rates, don't just wait for opportunities, sort of create them, I always say. So like seek a promotion, demonstrate your value by taking on more responsibilities during this busy period. So if your boss sort of looks at you and says, well, you could be doing more, or what are your KPIs, your company may be more willing to promote the top performance, because your company or the business that you're working for, your boss, they're getting more work because of this, right? So if you're there to help them and assist them, you're going to be the brightest spark in the team, and they're obviously going to do the right thing, or should be doing the right thing, especially for the star workers. Those of you that rise to the plate and sort of take on more work and increase your capacity, definitely a good opportunity to also seek that promotion or negotiate a salary. So therefore, if you're going to put more work and effort into it, speak to your boss, network, as they say, network. A busy market means everyone is active. So those of you already in a job and you want to network to other departments within the company you're working for, or the other stakeholders in the business, make sure it's a time to build strong relationships with clients, suppliers, industry peers, as they also do have other opportunities out there. So what I mean by all this is that everyone's obviously going to be increasing their work capacity. That means that they're increasing opportunities. They need people to fill these opportunities and to get on with the job. So definitely an awesome time to take advantage of a career move, a career enhancement, higher education, that sort of stuff. I hope this episode helps, guys. I thought it would be a quick one just to say, what are the repercussions? It's not always about repayments and saving money. It's also sort of changing your mindset to open your mindset and say, well, okay, if it's going to create a lot more economic activity and people and industries and companies and businesses are going to be a little bit busier or a lot busier because of the drop in the interest rates and people have more money to spend, take advantage with your career and maybe take it another step up if that's what you've been considering. Okay, see you on the next episode. See you guys.